Hi everyone, today let's talk about the Fed comments, then we'll get into the calendars, then we'll get into the charts, then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So we got the pause just like we thought we were going to get, and it was unanimous. Every single person agreed to pause at current levels. They also upgraded their assessment of the economy, saying that they still think the economy is doing well, leaning into that soft landing narrative. Everything still looks good there. Of course, he still said some of the same things. Inflation still has a long way to go, and most people don't think that we are done yet. There's still potential there could be rate hikes in the future, but this is 2 consecutive meetings in a row now with a pause. The question is what happens now and when. They said economic activity continues to expand at a strong pace in third quarter. They also mentioned GDP numbers were good and that the jobs reports continue to look quite good. And then the chart here shows that we have paused for 2 months in a row for the first time in a very long time, going back to March of 2022 when we got our first rate hike of this cycle. They mentioned that there is still 1.5 jobs for every single worker in the United States, which is still quite high. It used to be at 2, so it is coming down steadily. And then looking at the Fed funds rate, we have been on this very steep trajectory and now we have flattened out. The question is, will this look like the same thing that we saw here from 2004 all the way to 2007? Very consistent hiking. Now we're in this flat portion potentially. And then after that, we had a catastrophe and we had a massive move lower. Is that what we're going to see here? Of course, no one knows quite yet. But so far, the higher for longer mantra continues to be the central theme, and the economy continues to stay stronger than expected. Bond yields have been doing some of the work on behalf of the Fed. We've talked about that before. Yields continue to go higher. They mentioned term premium, meaning that investors who want to hold these bonds for longer are demanding more money to do so, and that tightens financial conditions on behalf of the Fed. And that's starting to have a bigger impact. Once again, we saw it with the regional bank crisis. Then yields kind of cooled off a little bit, and now they are once again at those same highs. And this is definitely starting to impact the Treasury here, which we talked about before. They are looking to borrow about another $1.5 trillion over the next 6 months. And all of that is going to be at a very high interest rate relative to what they have been getting when yields were closer to that 0 to 1% area. Now they're paying around 5 to 6% depending on what term they're selling those bonds at. The question is, how will all of this affect the economy? And we have the Atlanta Fed putting out numbers for GDP in fourth quarter expected to be around 1.2%, cut down from the 2.3% previously expected. So we are seeing that economic slowing despite the raised expectations from the FOMC. Moving over to the economic calendar, ADP non-farms, much lower than forecasted, but better than the previous read. ISM manufacturing employment, also below 50, not great. Manufacturing PMI, worse than expected and lower than the previous read. ISM prices, better than expected and also higher than the previous read. JOLTS report came out a little bit hot. Previous number was revised down. So jobs market still fairly strong. And then you have Fed interest rate right there at 5.5 once again. Looking at tomorrow, we have initial jobless claims. That's been fairly interesting. And that's just about it. Fed balance sheet, those continue to roll off. And it's interesting to see how much of them roll off each and every week. And then looking at Friday, of course, if you hold anything overnight on Thursday, you'll be affected by some of these 8:30 numbers. You got non-farm payrolls, participation rate, unemployment rate expected to stay steady. That could be interesting. And then later in the morning, you have S&P Global Services PMI, ISM non-manufacturing PMI, and non-manufacturing prices at 10 o'clock. Moving over to earnings, we got Qualcomm beating. Ton of green here today. Airbnb beat well. Humana beat. PayPal beat. They put out some softer guidance, but still doing well. Kraft Heinz beat on earnings, missed on revenue. And then you got Estee Lauder beating on earnings, but missing on revenue. They were expected to actually have negative earnings, but did have positive earnings, so that was interesting. And then don't forget on Thursday, after hours, this is the big one. You have Apple, the biggest company in the world, reporting earnings. Their guidance is going to be very interesting. How is it going with the new iPhone? How is demand? That could be a big driver for markets. And then you got Starbucks, fairly interesting. Booking, ConocoPhillips, Eli Lilly can be interesting sometimes. And then you have Duke Energy, Marriott, some of these other more interesting companies. Monster Beverage, fairly interesting. It always shocks me that that's a $50 billion company. Overall, watching that Apple earnings tomorrow. Moving over to Max Payne. Max Payne moved down a little bit, 419. Put wall still at 410. We said 415 to 420 made sense. Now we're looking at 420, potentially up to 430. That could be interesting. Top of the puts, up around 429 to 430. That would be the top of what I would expect for this week if we did get a bigger move higher. Total options, right around 1.1 million. Put call ratio continues to dip down closer to that 2 range. It was up around 3.5 last week, so that's finally starting to move lower. Overall, everything looks a little bit bullish here in my opinion. Moving over to the charts, starting off with the S&Ps here on the hourly and the daily. Everything looks super bullish once again. We got above all the EMAs and SMAs here on the hourly chart. I did extend this line out from this previous high. I don't know if it's going to be a strong level or not. Sitting around that 424.62 area. We did get above 421.85, so that's now the level to the downside. To the upside, 425.82 was the level that I had previously. We are overbought here on the hourly chart. It would not surprise me if we did get some kind of pullback. This is starting to go pretty parabolic over the last 3 days. Really strong push, 1% on the day. We also tested that 200 SMA on the daily chart. You can see that test here. Momentum continues to swing to the upside. Plenty of room on the daily chart. I would expect any down moves to be bought up at this point. You'd want to see that 9 EMA on the daily chart hold. Currently sitting at 41.92 on the SPX. You can see we also got above that trend line pretty strongly. Wouldn't shock me if he came down, retested it just a little bit, and then rallied higher. But overall, everything looks good here, continuing this slight uptrend. Of course, this medium term is still a downtrend, so there are some resistance levels in this zone that you do have to pay attention to. But right now, it looks okay. It also looked okay going back to the beginning of October. We ended up getting a pretty substantial down move from there after we tested this same area, so be a little bit careful in this zone, but it looks okay for right now. Moving over to the Qs, similar thesis, parabolic move on the hourly chart, overbought, bullish momentum above all the EMAs and SMAs, extending out that same resistance line, sitting in this very similar area, 359.57. We are at my resistance, 358.04. After hours, we'll see if we can hold that level, if we get a little bit of a pullback. Let's zoom out here a little bit on the daily chart so we can see kind of where we're at in terms of structure. Gonna pull this trend line out. You can see right in that same area, right around VWAP, 358.61. Could be an interesting area. Maybe we see a little bit of a pullback. Could be interesting. This is a pretty strong push out of this deeper low here now. Momentum continues to tick towards that bullish side. I would expect this to follow through, similar to what we saw here, where we tick towards bullish, follow through all the way to those solid green candles. And then once we see that start to roll over again, we might expect a little bit of a pullback, but that's not where we're at right now. Want to see it get through this pretty contested zone. And then if we get all the way up to some longer term trend resistance, that would be up around 368 to 370. Certainly possible on the daily chart. Similar to what we saw here, where we dipped down quite deep, rallied through, pulled back, retested, and then followed through to those upper trend lines. Does seem possible. Moving over to the Russell and the Dow. Russell perking up, quite bullish on the day. Got above trend resistance, bullish momentum, bullish RSI on the 4-hour chart. Still got the 55 sitting up here at 167.50-ish. Could be interesting in that zone. If that breaks, then we're watching for these previous lows up around 170.35. Certainly possible. Does look pretty good here to this current level. Clear bottom at support, rallying through. Could be a nice little move higher. Dow, similar thesis. Dip low, rallied through, slight consolidation. It's holding at that 55 EMA. We talked about that level yesterday. You want to see it get through to that 335.91 level. And then you got that highly traded zone just above it around 336.75 and the 144 EMA right in that same area. Of course, longer term trend, still quite bearish. We've seen moves like this where you get a little bit of a face ripper rally, consolidation, and then we see that bigger move lower. So longer term, still a downtrend. Shorter term, definitely bullish. Moving over to the equal-weighted S&Ps, I just wanted to highlight how similar this move is to this previous low. Bigger sell-off, consolidation, 4 strong days of bullish price action, hit resistance, sold off. We've had 3 days in a row here. I would expect to get up to 137.57, which would be about another $1 and a half of upside. Momentum says we have about 2 to 3 more days of bullishness based on this previous move, and I'll continue to watch this. Obviously, the longer term is still a downtrend, but every trend reversal starts similar to this. Get a nice rally, pull back a little bit, establish a higher low or a double bottom, and then we rally out of that area. So you do have to watch it, obviously, for those kind of setups. Moving over to Apple and Tesla. What a move on Apple. Massive, massive move. Almost 2% on the day. Ripped through those levels, rallied right through the 55 up to the 144. Got through that level after hours. Next level for me, 176.15. Then you got the 200 SMA sitting at 176.59. That's going to be some clear resistance. And this is a super aggressive rally. Could see a pullback from that level, establish a higher low and a continuation. That could be interesting. But right now it looks good. Tesla, similar thesis. Tested that level at 197.75. Held that level, rallied through the 21 EMA. It's up after hours, could be looking for that 214 area. We're back into this previous consolidation, which is a little bit of a bullish signal. You could argue this is a low, slightly higher low. If this is a pullback at all, could be just considered one consistent move here, but it's above the 21. First time we've seen that in quite a while. And you do have to respect that. And then you got the 55 EMA sitting at 220.77. Moving over to NVIDIA and AMD. We were watching these yesterday. AMD had earnings. You can see that massive bullish candle, almost 10% on the day. Big volume, big momentum. Everything looks clean to the upside. You now have basically a double bottom right at that 96 area. If it takes out this midpoint, that could be a very bullish move. Potentially looking at a push back up to these previous highs around 125. That would be interesting. NVIDIA also showing some strength, sympathy play here. Hit that 144 EMA on the daily chart. This was a super critical level at 405. We had tested this area a few times. We talked about it yesterday. Looked like a head and shoulders potentially. If this level broke, there's quite a bit of downside potential. But we ended up holding it here. Big bullish candle. We'll see if that continues tomorrow. I would expect it to. Resistance sitting up at 435.35. Overall, semis starting to lead us to the upside, which typically leads to more bullishness. Moving over to staples and discretionary. Staples rallied up. Once again, very close to these previous highs around that 68 area. Extending out that trend line here, you can see 68.30 is going to be resistance. Still in a consolidation, still looks okay. It's above the highly traded zone. You want to see this follow through here, start to break some levels to the upside. Discretionary, similar move. We talked how this looked bullish after holding the 21 EMA. Got up to 153.90. Looks clean. Momentum bullish. RSI bullish. Want to see it break that level as well as the 144. Looking at 158.03 to the upside after that. Moving over to breadth. 3 very strong candles in a row on both charts. Got up to that 55 EMA on the 50-day chart. We'll see if we get any kind of rejection from there. We paused at the 21, rallied straight to the 55 here today. Bullish momentum, bullish RSI. Looks clean. We did have a move similar to this where we got to that 55 and then rejected pretty strongly. 3 big candles in a row. The question is, can this hold? Is this a higher low setup? It does look like one, which means we should rally through this previous high. And then that would give us a nice move up into this 52 to 62 area, which should be a nice bullish move. 200-day average, similar thesis, 3 big bullish candles in a row. Typically, this takes a little bit longer to reverse. So we've been on this big down move. We saw the reversal. I would not be surprised if we needed a slight pullback, double bottom, or a higher low here to solidify this bottom and then get the follow through, similar to what we got on the 50-day average, which means we might need to be a little bit patient. But overall, this still looks like a reversal in my opinion. Moving over to yields, as you would expect, the Fed was a little bit dovish, did not talk about hikes, talked about higher for longer, talked about looking at the data. With a strong economy, meaning that yields started to roll over. 10-year yield actually made a lower low versus this previous dip. 2-year, basically at these previous lows here from 9 October. And you can see the 10-year basically at that same level based on time. If this 470 level breaks, that could be quite a reversal on the 10-year yield. sell off back into that 4.5 area definitely could be interesting, and I would expect that to be bullish. It does seem like that's possible here. Momentum on both of these charts is quite bearish. Moving over to the dollar on the hourly and the daily, not super convincing here today. We did get a pretty big break, ended up being a wick on the day, but looked pretty convincing here for a minute. And then Fed comments came through, we sold off pretty aggressively into the end of the session. Big gap down here on the rollover. Daily chart right in that same range once again. Does kind of look like a reversal setup now. So we have a high, a wick to that same area with a clear rejection. If this continues to sell off here, which it does seem like it's going to, that should give equities more upside. And I still want to see that 105.50 area break. Moving over to bonds, daily chart for JNK and TLT. Momentum on both of these still quite bullish. It did look slightly bullish yesterday. TLT didn't, but JNK did. Got above that 21 and VWAP, and then we got another big bullish candle, up 1/3% above 89. Interesting level here. We're above those shorter term trends. Looks okay to the upside. Pretty convincing in my opinion. TLT right at the 21 EMA. Yields do look pretty weak, so it would not surprise me if we saw a little bit more of a recovery on TLT. And if this is the area where we start to base off on TLT, it might be a good opportunity to get into some bonds for some longer term, pretty stable yields from the government. If you believe the US government is going to continue to be around despite their inability to pull back on spending. Moving over to the volatility indices, as you would expect, MOVE Index fell off a cliff, bonds starting to show some strength, VIX, similar thesis here, continued to fall, hit that 200 SMA just like we talked about yesterday. The question is what happens now, right? So we hit this level at this previous dip low, rallied through up to that 22 area. Realistically, I was expecting a push into this 24.50 level. Didn't end up getting that on this previous move. Question is this going to be kind of a head and shoulders where we had a left shoulder head, right shoulder? Certainly possible. Momentum starting to fade, very close to oversold. If it's going to find some support, it probably should do it now. Rally back up, maybe test this 1920 area, and then continue to sell back off into these previous lows. That could be interesting. But right now, this looks super bearish at a possible level of support. Moving over to my accounts, you can see I did pretty well. Up a little bit more than $1,000. Those puts that I had were basically worthless by the end of the day. They were the 347 puts, and then we rallied all the way up to 358 after hours. And so those puts were basically worthless. I ended up rolling them up and out to 351 for $1 credit. I might roll those in a little bit, we'll see. But my calls, I rolled those up and out as well to 353. For $5.50 credit, so my max profit there is at $358.50, and we are basically already there, so we'll see what I end up doing with that tomorrow. I'm not quite sure at this point, but this is a massive rally, trying to play it as much as I can to the upside while still being a little bit conservative. I do think we might see at least a little bit of a pullback off of this aggressive rally, but right now we're just not seeing that, so we have to continue to play the markets the way that they are presenting themselves, and so far everything is bullish. So I have my covered call with a little bit more profit potential there, and then some puts to try to capitalize on this continued rally. Then I sold some puts finally here on the IWM. Still pretty conservative, down at 163 for 2 days from now for 61 cents. Let me know down in the comment section what you think of the Fed comments. Are they done hiking? Are they just going to pause here for a while? Will they hike early next year? Or will we see GDP shrink to zero and they will eventually have to cut? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.